everyone. Thank you for joining me in another executive interview. Today, I have the pleasure of speaking with Bruce Davey, the Managing Director of ReadySet Apartments Group. So, Bruce brings a remarkable background of entrepreneurial success and is now revolutionizing how investors can approach residential property investment. Bruce, thanks for being here today.
Thanks very much, Phil.
Now, Bruce, with your impressive background in successfully founding and selling businesses like Fastmail.fm and Optimal Decisions Group, what inspired you to establish ReadySet Apartments Group?
So I worked for the purchaser of Optimal Decisions Group for 6 or 7 years after selling that business. And when I was looking for, what's my next challenge? I knew I wanted to start another business. So what I ended up doing, I put together about a dozen very high-level business plans of quite different business ideas that I thought might work, and then started whittling down that list and refining the stronger candidates. And doing something in short-term rentals was the winner of that little competition. The attraction of short-term rentals was really two things. The scalability of the model. If you can do short-term rentals well in one city, well, why can't you do it in 2 cities, 3 cities, 5 cities, 10 cities, and so on? There didn't appear to be in this industry a low limit in the maximum scale achievable. And the second thing that attracted me is I didn't see people doing this well. The early adopters in short-term rentals were people doing just one property of their own, and that was difficult for them to get a good return on their time because they didn't have any economies of scale. There were kind of one-man bands that were operating maybe 10 properties, and they didn't really even have the aim to systematise processes to make everything smooth. The kind of most corporate group that were getting in early were real estate agents that would do some short-term rentals together, and they did it like real estate. And so, for example, the prices were often the same every night of the year, maybe just different on weekends. The service was close to what it is for real estate agencies. Here's your keys, see ya. And so I felt there was both the opportunity to do better by the guest, by providing something in between real estate and a hotel, and also do better by the investor, the owner of the property, because nobody there was doing anything like what the hotels were doing in terms of bringing sophistication to the prices, bringing sophistication to the listing and marketing of the properties.
I understand. That's truly a very fascinating journey, Bruce. Now, the fund combines traditional residential property investment with short-term rental income. So can you explain how this hybrid model potentially delivers better returns compared to traditional property investment approaches?
So long-term rentals, the traditional rental properties, it's a fairly commoditized space. You have 2 properties that are fairly close to each other, fairly similar sized properties. The rents being charged will be fairly similar. The price of those properties will be fairly similar. And so the returns that those investors get will be fairly similar. Short-term rentals, though, if you look at the data, you can find 2 similar looking properties where one of them is returning double what the other is returning. And it's all about the many, many decisions you make about how to price it, how to market it, where to market it, how to interact with the guest and so on that drive the difference in those returns. And so there's quite a prize there for a well-run short-term rental. I also see some synergies between short-term rentals and managed investment schemes. The short-term rentals, doing short-term rental, managing a property or renting a property and subletting it, you have the property for as long as the owner wants you to have the property. And so what typically happens after maybe 3 or 4 years, the owner might have moved on, they want to sell the property, they want to move into the property, and you've done all the work to furnish the property, and then you're going to pull that furniture out again. Whereas through a managed fund, the fund can hold the property indefinitely, even if some of the unit holders in that fund change over time because their needs change over time. And that's actually a massive efficiency gain to be able to do that work and spread it over a much longer time frame.
Absolutely. And your experience is clearly deep in this sector, as we can see. Now, Bruce, with 8 years of experience in short-term rentals, what key insights have you gained about maximizing property returns that you're applying to the fund strategy now?
It's all about optimization. And so there's actually a lot of analytics that is in this business. And so it's about selecting the properties that have a higher potential income, about setting the prices for properties to maximise the income that you do get once you have a property on board, and varying those. To give you an idea, for an event such as the Melbourne Grand Prix, one of the biggest events of the year, we would charge something like 4 times the price for a night than we would charge for a Wednesday in the middle of winter. And varying the price appropriately makes a pretty big difference to the return you get.
Absolutely. Well, those are valuable insights, especially considering the sector's volatility. Now, speaking of which, the pandemic was a significant disruptor. So in light of the lessons that we learned during COVID-19's impact on the rental market in 2020, how has the fund structured its risk management strategy?
So in the event of, another, COVID 2.0, I guess, the first thing I'd say is if something like that was to happen again, it helps for your starting point to be a high yield, and we're a high yield property fund. Also helps to have a conservative leverage, and so we've got a 50% target because you've got more of a fiscal buffer for any kind of a problem if that's your starting point. Secondly, it's all about having a plan B and a plan C and a plan D for, what would you do if different problems happen. And I think one of the great things about short-term rentals of residential property, our income stream and our asset are different. Our income stream is an accommodation income stream. And so if COVID 2.0 happened and let's say we decided to lock down again, not that sure that we would, but let's say that we did decide to lock down again, well, that's income stream. But our asset it's not a hotel where the asset would also be impacted. We've got a residential property as our asset. So we've got options if the accommodation income stream gets taken out by a big problem. We could put that same property onto the long-term residential rental market. Depending on the location of that, there may be other options. So, for example, where I sit here in Melbourne CBD, there are a lot of student accommodation around, so you can potentially use properties for student accommodation. Also, you can sell it. And unlike trying to sell a hotel in the middle of the pandemic where they're looking at an asset with no income, you're selling a regular residential property if you were to sell. So we've got a few more plan Bs available to us than a lot of other situations in the space.
Amazing. And then, definitely a risk management strategy is very crucial, and we appreciate your transparent approach. Now, Bruce, many investors will be curious about returns. So the fund targets a 9% annual return with quarterly distributions. So can you elaborate on how this fund aims to achieve this target?
So the numbers, the income in that number is based on, we've been operating a portfolio of short-term rentals now for over 7 years. So the income's based on actual incomes of similar properties historically. Then we've assumed a capital growth of just 2.4% baked into that 9%. So with the income, where the numbers in the PDS are based on a net income of around 6%, and then the capital growth of 2.4%, and then the balance is the effect of leverage.
Amazing. Now, Bruce, looking forward, scaling is always a critical phase for any investment vehicle. So, as you move into the hard launch phase in 2024 to 25, what are your key objectives for scaling the fund and how do you plan to execute them?
Okay, so our intention is to raise 10 million over fiscal 24-25. In terms of execution, actually, we already have a team that's setting up a new property every other week. At the moment, focused primarily on our rent and sublet business. And so, in terms of execution, we'll do a combination of switching the attention of that team to adding properties in the fund, as well as growing the team slightly over time.
Brilliant, very exciting indeed. Now, for our audience members watching this interview, if you would like to get in touch with the team at ReadySet Apartments Group, please see the details at the side of your screen or in the description of this video. And Bruce, I would like you to thank you for joining me in this conversation and providing such comprehensive insights into the work that you and your team are doing.
Thank you very much, Rhythm.
Thank you.